world? Well, I dubbed yesterday, welcome to Warsha's world. He's the new sheriff in town, and the market is the market is going to respond, accordingly. One thing we've noted though for quite some time is that the upside rallies potential or attempts kept getting smacked down. They'd rally it up, smack down, rally it up, smack down. Again, we were kind of going over this. All right, let me just kind of expand this out a little bit further. All right, let me just kind of, all right, so kind of here's that scenario, right, where they tried multiple times to get up through these highs here, the 76.20-ish, 30-ish, and only to get smacked down. Then when they get smacked down, the market tried to reclaim that area, that break, only yet to get smashed down again. All right, and once again, an automatic response to try to come back up there and reclaim that yet again. All right, so again, all these attempts, all right, over the past couple weeks have been thwarted, and of course, this being Fed day here yesterday, all right, the market just, again, we talked about these symmetrical swings besides, right? These swings here, these swings here. Now this was a symmetrical swing here early on, but again, it got smacked down. So now this little move here, again, for any of you white coffeeans, right, it's called an automatic reaction or an automatic response, right, to a dramatic move in either direction. So you can see here, move down, you get an automatic response. You get a move down, you get an automatic response. Same thing here, hard move down, you get an automatic response. All right, so that's kind of a white coffeean observation. So if you've studied any of Wyckoff's works about the markets, you'll understand that. But basically, it's just kind of things get oversold deeply, and think about two things here, right? Those that were selling long, right, yesterday, they're more likely done, right? Particularly certainly the intraday traders, but others as well. And so after a dramatic move like that, think about it for yourself even. Like if you were running a fund of sorts, trading for a fund, and you were forced to liquidate. There was a lot of forced liquidation yesterday. So you were forced to liquidate. What are you doing today? You kind of licking your wounds, perhaps, right? You kind of like, okay, I'm taking a breather from selling. So what happens is you get this kind of automatic snapback, right? That doesn't mean that the buyers are dominant. It just means that the selling pressure was relieved by the end of the day, and there was no more selling pressure even into the overnight. So a lot of people kind of look into that and say, okay, well, I'm gonna try to take advantage of the buy the F and dip type of thing, right? So you get kind of that automatic response. So here we are. 74.05 was a target of mine for based on the daily trade strategy. And of course, today is a cycle day one. So right now, the current low, is down here. Is it secure? Again, I cannot fully say. Certainly looks that way, but again, we're in the beginning of the day, so anything certainly can happen. But for now, we're just going to stay, alignment. Okay. Again, cycle targets are way back up here at the 74.36s. right? You got a 3-day central pivot zone up there. You got a big cluster of volume from the prior uh, upper zone, right? So a kind of a move back up to, what do we usually refer to this as? This is where it really broke, right here, okay? That's where it accelerated, was around the prior cycle day one low at 74.16s. So what do we call that, right? The scene of the crime, right? The breakdown. That's where it accelerated. And so no surprise if we get, a move back up into that area. So the market's going to need to kind of absorb what's going on. We had some earnings yesterday in the tech sector. So the market's just going to, think about it. Just market's going to need some time to now absorb what unfolded yesterday between the Fed, assess, make an assessment of all that, of what Warsh has said during the conference, earnings, of course, Middle East stuff. But again, in terms of what we look for and what we do and how we do things, you know it. We're going to stay in alignment. We can take our core trades, and I don't care where the market goes. I'm not trying to make a prediction of, in any way, shape, form of where it could go. I mean, it could certainly continue to go higher, right? It could stall out and reverse and retest the lows. Again, it'll do anything it wants. What we need to do is read it, not predict it, what is happening, and then where potentially, a greater reactions could unfold. So in other words, right now we have, to the move to the upside. So what's the lean coming in? Kind of the observational lean. Let's kind of use that term, that adjective. The observational lean is what? The observational lean is to the long side as we see it. All right. Okay. We'll continue to monitor and be aligned with that observational lean for as long as it's going to stay in that configuration. You could certainly be thinking or anticipating that if price gets to certain areas, that we would be looking for some sort of, pullback reaction. Certainly advisable and certainly, acceptable to think that way. What we don't want to say is the market's going to stop here and I'm going to short them at this point, and it's going to, again, trying to make those predictions, right? So kind of think about it this way: scenarios. Okay, scenarios. And again, I lay out scenarios. I've always laid out scenarios. So scenarios are not predictions. They're just simply scenarios. This could happen. We're in the process, of this lean. And this could be a scenario where it moves to such and such and it stops or reverses or it shifts. Or, again, all those type of things. Those are all just basically scenarios, right? And what we want to do is we want to lay out, we don't want to lay out like a laundry list of scenarios. What is the most likely scenarios, in the very near term? Because that's, since we're trading. Does that make sense, everybody? So think about it in terms of scenarios, not, predictions in any way. All right. All right, that's about it for me. I mean, again, aside from, what I wrote on the daily trade strategy, those targets have been fulfilled. And we'll see how the market kind of, accepts this. Now, again, looking at yesterday's action, right? Again, we got a cluster of volume, basically within, kind of right pretty much where, if we carry this forward, right, pretty much right where we are. So there's some heavy volume that occurred yesterday in this area, of course, cycle day one low. All right, but there's heavy volume in this area. So we're going to see how this area here, we always see some volume picking up pre-opening in this area. So again, we're going to see how this unfolds for us today in this area. All right, questions, comments, considerations, feel free to post. All right, and let's make it a good day. Always a good day. If you follow your rules, if you execute according to your rules, you should always have a good day. Don't judge your day, whether it was good or not, based upon P&L. Otherwise, you will need institutional help. All right, very good. All right, let's see what Mr. Market has in store for us. All right, we got about a minute and a half or so, a minute to the opening. So this is a kind of the time look back and say, okay, where are some pivots that we can identify, right? Let's see. Let's use the extending rectangle, right? So we can get right in here, the low edge of this volume, upper profile here, right around the 89 EMA. Right. All right, and here we go. Dingity ding ding. All the traders are in the ring. All right, so again, these are all your opening trades, pent up buyers. Right up to prior, this was yesterday's opening range area. If you recall, again, we have our indicator there that outlines that. So yesterday's opening range, and again, right back to the prior low. Again, should be no surprise, automatic reaction. And we're on the up leg swing of this move, and we'll see how far this brings us. Easy peasy, right? Easy peasy, lemon squeeze. Let's clear that off because make sure we clean up the chart a bit. Stay focused on today's stuff. All right, so we're right back to yesterday's RTH VWAP. Yesterday's Whopper. All right, so first push, anticipate some sort of a pullback here. If you're interested in a long on a pullback, we'll be looking for the 810 area. That'll be the initial area to look for pullback long. All right, so right here, pretty heavy two-sided. Buyers holding control though. All right, just again, as always, just be patient. Let the market kind of dictate what it wants to do. Little tight range like this is not much meat on the bone at the moment. So by way of observational lean, right, it maintains to the long side. So again, be sure to continue to go through that your OTA loop, right? Remember the OTA loop is a kind of visualize that bicycle wheel. It's just a spinning wheel in terms of when you're observing and orientating. It's slower rotation. When price is reaching an area where of interest of a trade, again that OTA loop begins to speed up, right, into the decision action cycle of the OTA loop. So right now we're still in that observation orientation. Okay, so again, down towards the 95s. If you're looking for a long, that'll be the A10, 95, 96 area. A little bit of two-way action up here at the moment. Still in observation mode. And so buyers remain dominant at the moment. And we remain patient. All right, buyers still aggressive here. So the early read was good, continues to be good. Again, the observational lean being long, so it continues to be good. Let's see. Just trying to look for another area where it may. I'll let the market determine that. Staying in alignment. That's all. I was watching one guy last night on YouTube. The plan for today. Okay, good. He's adamant that he's going to short the opening. I mean, when he said he's adamant, like I don't know if he did, but adamant going to short the opening. My question is why? I know talk is cheap. I know it's actually exactly clickbait, you know, right? And that's why I don't really pay attention to anybody on ScrewTube, or I don't really pay attention to anybody, on you know Twitter and all that stuff. But I was just happened to be scrolling through uh, actually some music stuff last night, and I said, let me listen to this guy. Yeah, you know who they are. You can tell. I just find it comical. I do. Sad but true. All right. Hey, you know what we could do? We could do anything at the market, but I mean, what would be really cool is today regains all the way up to yesterday's high, just to mess around with people, right? Just to mess around with people. There's a chunk of volume sitting at 74.30. Well, now that's gone, and it's gone. It was 2,000 contracts sitting at 74.30, and it vaporized. They just swept out liquidity. There you go. There was 2 lots of 800 sitting up right around in this area here, and they just market ordered it. Now, when that happens, when somebody, you see the market kind of slowly creeping and creeping up, right? Again, those are majority of the time those are shorts. Kind of keep pressing, pushing, trying to find liquidity, right? And they do it quietly, slowly, so they don't just. But when some liquidity does actually show up, so there was a 1900 lot that canceled. That was at 30, and then basically eight. All right, I got to take a call, guys. I'll be back. Sorry about that. Hey guys, back with you. Sorry about that. Um, had to go on a conference call this morning. Let us know if the audio is back for everybody. That would be great. Okay, great. Thanks. Yeah, sorry about the disruption. I had to take that call. Let's see where we've been. Well, yeah, okay, back up to the prior opening range. Okay, so we're still in control. Bulls are still in control. It looks like we just missed the A10. Right? Just missed the A10, rat bastards. Okay, so just missed the A10. All right, what are we looking? What's our sandbox? What do we get for a sandbox? 25s, 25s in the low end, 45s in the upper end. Kind of a wide sandbox, but we can use that. We can use that. So active sandbox, 74.25, 74.45. All right. Do we get a full recovery? What do you think? Full recovery back to prior highs? It's certainly possible. Don't rule it out. Yeah, the NQ is greater than the prior day's high. Okay. Yeah. Okay. Well, it was the leader to the downside, right? So naturally, strong rebound right back up. All right, down to the 25s. Again, that's where the A10 kind of is, the lower end of our sandbox. Let's keep our fingers crossed we get an opportunity there that we can participate in and not just get ripped right through, you know. Rip it good. Do 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 do. Crack that whip. Wonder how that guy is doing if he wanted to short the opening. I wonder if he followed through on his plan, or is he just another hump trying to get clicks? Yeah, exactly. He'll only follow through if the trade was in the money. Right. Otherwise, crickets. You're absolutely right, Libby. Absolutely right. Right. Well, maybe we may have a chance here into these 25s. The A10 has begun responding recently. It went through a very, very dry period of underperformance, like it was never there. This week, though, far it's been responding, so you know doesn't mean the next one will. It's just it has been. So let's keep our fingers crossed that it continues to. Ah, yeah, exactly. Uh, Right, the 810 not playing out. Just you know what the problem is? The market runs too far, okay? And when I say too far, it's gone quite a bit, quite a distance, right? And then when it starts pulling back, again, all those buyers that had pushed it up, and got filled at those higher levels, there's not really anything left, in the hopper, to buy, buying power. So then the thing just kind of drops, and you're not really getting that, moment. I've seen this happen so many times. The market just runs away too far, and doesn't get a normal pullback. And then when it finally does pull back, I mean, it's kind of an old, it's kind of stale zone, you know. Yeah. Anyways, all right, we went up to, let's see, that was the prior high on that, right? Look at this, right up to the 45s. We've seen 45s how many times this past week? I don't even mention it. We've seen, I've posted 45s a number of times this week. All right, look at that, right up into the high volume node to the 45s. So really not surprised, but now where's the next area? Well, back down here in this volume area. Okay, so this would be at least an anticipated area. Was it 7,400 to 10s or so? All right, 7,405 to 10s. So that could be the next area of potential, interest for a long. VWAP's at 08. Okay, yeah. So again, I'm just looking where the volume, some heavy volume was taking place. Okay, 10 also touched there yesterday. Okay, good. Ram, how's that new configuration working out for you? Okay. All right, here we go. Back into the tens now. And this was just noted as a high volume area before, so may have some response into this way. So again, I don't think anybody is short, but if you are short or anybody that would be short, this would be a response area for uh, taking in a long, taking in the short rather. I'm sorry, taking in the short. All right, good. All right, so got a no bounce there, got an opportunity on a short side trade. All right, A4, and then 3 trades out. Let's bring our stop down to even on that since we got 3 trades out. Nice, very nice, very nice. Boom, locked and loaded. All right, one shot, one kill. One shot, one kill. Good job. All right, so now we just have our short buy stop in place at entry. Good job, Steve. You know what? Steve says he was a nervous short, but took it. Again, sometimes, that's the obstacle, right? That's the obstacle that, sometimes the best trades are the ones that you're most nervous of, you know, right? And you're kind of like fearful, right? Steve, let me ask you something. Let's do a kind of an exercise here, all right? How fearful are you? No, how fearful of you to fall off your motorcycle? This is a good exercise. How fearful of you to fall off your motorcycle? My guess is not fearful at all. Why? Because you've been riding it for a long time. Your confidence, you have a high confidence in being able to handle it, right? Yeah, you fear others to kill you, right? Exactly. But for yourself, for you to fall off the bike, little if none, right? It's because you have mastery. Yeah, many years, right? So you have mastery over riding that motorcycle, powerful as it is, right? But you have mastery over it. But in the beginning, okay, though you may had some apprehension, the excitement overrode any potential fear that you may have had while you were learning how to ride. And you're and the likelihood of you falling was certainly much higher in the very early days. Would you agree? Right? When you're first starting to, exactly. Okay. So this is what it's kind of what it is, right? It is when you're taking a trade, is the signal the valid signal that you're looking for, right? And the more you take it, again, kind of think of it as experience, right? The more you take it, right, is as much as fearful as you may be or apprehensive as you may be, right? You take it because there's a level of excitement and you have the determination, right, to take that trade, the hard trade. What I call the hard trade is when you're really nervous about a trade, right? But it is the proper configuration, but you're still nervous to take it. So you just like, you got to, you got to say to yourself, I got to take that trade. What is the worst that could happen? Consider the worst case scenario. What is the worst that could happen? Going to get stopped out. Am I accepting of that level of risk? Yeah. Does everybody get stopped out on trades? Yeah. Okay. So it's just a matter of, you know, just viewing it from whatever lens that you need to view it from. Is there's nothing inherently fearful in the trade except for what you place on it, right? The fear is not on the chart, right? It's just the chart is doing what it's doing. It's generating a signal. It's not a fearful signal. It's nothing of it. It's just a signal. So it's again, it's really, this is where the trading really lies, is how we're viewing it. Are we viewing it as danger? Are we viewing it as something threatening? Or are we viewing it as a positive opportunity for me to, to build your account? You know, yeah. So Steve says, I create the fear then. Yes, we create our own fears. The market can't create the fear. We create it and how we're interpreting it. So if we create the fear, what's the resolution of fear? How do we get rid of the fear? Who gets rid of the fear? We do. And it's how you frame it, right? It's how you frame it, how you're framing that fear, right? That's the time where you're exploring. This is the good time, right, for yourself and for anybody else. Is that's the time where you really want to explore what is generating that fear. You really need to be specific about it, right? What's generating that fear? Well, maybe you took a loss on a previous trade. So did you follow? Was that a valid trade before that you maybe took a stop loss on? Was it a valid trade? Did you follow the rules according to that trade, according to your plan, right? And if all those answers are yes, then it's just part of part of the trading. If it's not, if you didn't follow your rules or it wasn't a well formed setup, that you again that could be, you're taking the wrong type of trade perhaps, right? I don't know. I'm just throwing that out there as a potential, right? So then what happens is when a good valid structure, right, develops, you're fearful to take that trade because you just took a loss on some other trade. But you're right? Each trade is independent. So if you start daisy chaining trades together, what does that do? That actually enhances the fear for the next trade, particularly if it's been a loss, the previous trade or trades. Okay. So that's where the battle is. The battle is not on the screen. You know, it doesn't know what you're doing. If you're trading, it doesn't care. There's not even any caring about it, period. It knows nothing. It's all in our head. That's really where the battle is. And it's always been where the battle is. And what are people really trading? When you look at the market action, what are people trading? They're trading their beliefs, they're trading their fears, they're trading their, greed, okay, and everything else in between. Throw it in there. So, they're all trading their fears to some degree. So that's where really the battle is. So we got to learn to fight that battle because that is a battle that we all have to encounter individually. We can talk about it, we can recognize it, we can, talk about ways of combating it, but at the end of the day, we all have to fight those fears, whatever we have, right, individually. Yeah, we all go through it, right? We all go through it. But the more you can push through it, that fear, and take that trade, right? So right now for you, Steve, right? You had that apprehension, you were nervous, you took the trade. I'm sure you feel good about it, right? Embrace both sides of that feeling, right? Which one is dominating? Hopefully the feeling of satisfaction that you pushed through that apprehension and you took that trade anyways. Okay, that's where you gain traction with trading. That's where you gain traction with your own decision making. Taking that hard trade when you are nervous, but you know it's the proper setup. All right. So obviously we have a flip, a shift. We did get down to that 74 to the tens that we highlighted. Again, that high volume note. So no surprise we get a little bit of two-sided action in there. Why? Because we have that was a previous area of high volume, and the markets need to find levels of liquidity. And so high volume areas are levels of liquidity. All right, so they were able to find some liquidity, but the sellers, still are dominant right at the moment. All right, market's challenging its opening range low now. All right, right down to 7,400. So 7,420s right now is our new sandbox. All right, so just looking for premium conditions now, of course, right? Remember, a premium condition is not just CCI, right? If price pops above the 89, that's still a premium condition, right? So price at or above the 89 with the 34 below, that is still premium. You want to be looking to sell premium, right? Buy discount, sell premium. Then these two over here were the higher quality ones because they occurred first, right? The early pullbacks. Oh, oh boy. That's let's see. All right, so now we're just sitting in our new sandbox, 7400s to the 20s. Question was, how did I know this area was going to be kind of a support area? I didn't. What I recognized, and this is something that you may want to, keep in mind, right? Price was trading up in this high volume area, right? And then as it started transitioning lower, the question becomes, where would the next, call it support area, would be located? Well, one of the ways to, you know, have high confidence area is where was a prior area of high volume. Remember what high volume represents. It represents an area or a zone of acceptance, both sides. Also, it represents an area of liquidity. Does that make sense to everybody? It should. Okay. So when the price, started rotating lower, you have all this low volume area. So low volume is rejection. Not a lot of time, not a lot of volume is spent in that area. High volume is acceptance. Okay. Liquidity, right? So they can do a lot of business, is the majority of business. They can do quite a bit of business in that area. Why? Because that's where business was conducted before. Though it moved away from it on the way up, back down, that would be another area, at least to consider, that more likely would be accepted once again by both sides. So with a level of high confidence, you could look for it and say, well, the market's moving down. Well, that's why I said on 74s to 10s in that area would likely start seeing some two-sided, an increase of two-sided trade. So it's not a matter of like, oh, I knew what was going to happen. It's just when we're, again, one of the areas, like, the market needs to or likes to go to area to get business done, right? Inventory, shift of inventory, move their inventory. Inventory for us is just, our positions, right? So it's basically the same thing as inventory. So inventory needs to, sellers need to find where those buyers are, and vice versa, so they can move their inventory. The big institutional players, I've said this many times before, say it again, they don't care about the price. Not as much as they care about the liquidity. It's all about where the liquidity levels are. How much business they get done. So when you look, to me, that's one of the main takeaways of using profiles, is to be able to identify areas of, high and low volume, where prior volume, took place, where can the, everybody's obviously positioned, right, coming into today. So those positions do drive the directional momentum. So if a lot of folks came in short, either via long put options or just straight short futures or ETFs or any combination of it, market starts moving higher, just by the nature of their position. What are they forced to do? They're forced to buy them. And then when you get, that, move up until an area where they can find ample supply. Generally, that's going to be in a prior area of higher volume or some level of volume. And again, you can find out those areas on using the profiles, and then you can make some inferences about that. All right. Anybody have any questions, comments? I know I was off the mic for a little bit on that conference call. That was unavoidable. But if you have any comments, questions, or anything, I'll be happy to field them. Otherwise, I'm going to cut the stream here for the day. Looks like we're in, again, we're in our current balanced location now, between these 7400s and say the 20s. Right. Steve, thanks for noting what you did about your nervous short. I'm sure others appreciate it. Of course, I do. And again, it offers an opportunity to discuss, perhaps some techniques to address it, find some solutions. Just remember one thing: the market cannot, and this is a core belief of mine in the market, the market cannot hurt you. There is nothing in the market inherently dangerous. No matter how fast it moves, how slow it moves, it's not out to hurt you. It exists. It does not care if you come in trade, log in, do all the things. It does not care. There's no even, and I'm talking about caring as like it's a human, entity, right? Doesn't care. Nobody's gonna, you're not gonna get a beckoning call, on your smartphone from the CME saying, "Hey, how come you're not trading today with us? We need your liquidity." You know, they don't care. So the market cannot hurt you. Never can, never will. It's how you react to the market, to what the opportunities there. That's where that's really where the game is. It truly is. I can't stress that enough. That is really where the game is. Whether you say you're a poker player or a blackjack player, say for instance, because I use both as analogies. Poker has obviously strategies. You gotta read the table, and all that. I'm not a strong poker player, right? But you gotta read the table and all that. Blackjack, there are strategies, again, short of counting cards, but the point is, you got to watch the cards. Do you hit, do you stand? All right. So, and also one of the things is if you don't have a lot at risk, so if you find yourself very nervous in any way, right, ask yourself, look at how much am I actually risking on this trade? I know we like to make a lot on a trade, but how much are you risking on it? Because your first job, by the way, if you didn't already know, is you're a risk manager. Okay, you have a certain amount of capital to deploy, whether it's prop capital or it's your own capital. You have a certain amount of capital to deploy. How am I going to deploy that? Looking for a percentage return on that money. Okay, that's really what it all comes to. I don't care if you have a $5,000 account or a 50 or a $500,000 account, right? How are you going to deploy that capital? That's, whatever you have in your account, that's how many chips you have on the table to play the game. Are you placing all your bets on one trade? That's a lot. Your risk of ruin is very high, super high. You want risk of ruin where it is minimal as possible. Think about the monies that you're working with and what you're looking to try to get a return on that money. Money managers, by the way, if they get, you know, a half a basis point, say, month, or you know, or 3/10 of a basis point a month, managing risk properly, okay, um, they'll collect a lot of assets under management, but they don't go out there risking, huge amounts. They risk small amounts based upon, the capital that they're deploying, but they're really just looking at small rates of return. But those rates of return, monthly, very small, add up. And all of a sudden, over 12 months, somebody's up 30%, 20%. Yes, we have a lot more leverage, for what we do. But again, most people do not know, traders do not know how to deploy capital. Yeah, it's like another example I use when it comes to that is you have a car with a Hemi engine, right? Lots of horsepower. Are you flooring it every time you get into that, car or truck, right? No, you just, you have it in the event that you need it to get out of a situation or whatever. But no, you're gonna, slow and steady, even if though you got a lot of horsepower. So if you have a sizable account, are you putting all that money at risk because you have a sizable account? You shouldn't be. You should be managing, deploying your capital properly. So whether it's a $5,000 account or a much larger account, think about how much return on that. Yeah, it's really not how much you can make. The idea is if you are taking the proper trades based upon your plan, right? Now, again, there's a lot of market movement. Okay, one could say, geez, there's a lot of market movement. So there's a lot of opportunity out there with the movement. But that doesn't mean every bit of movement is your opportunity. There's just a lot of movement. You're the one that needs to decide and to be able to, have done research on it, and whatever trade you could be taking the trades we have here available, right? But ultimately, and another thing a lot of people don't realize, right? You're trading one contract. You're trading a lot of notional value in one contract. So, again, it's all about managing your risks. Yeah, okay. Most guys that get killed on a motorcycle or on a bullet bike, yeah, you know, right? I don't see too many people, getting killed statistically, perhaps, sitting on the type of bike that you have. you know, because you're like easy rider. You just want to ride, enjoy, you know, you're not there racing, you know, right? So, you know, their risk of ruin. Yeah, you just want to cruise, you know, right? That's all. Enjoy it. Enjoy the experience. So you want to reduce your risk, right, as much as possible, right? But enjoy the process. Enjoy the ride. Well, the same thing with trading. Don't take a lot of risk. Take small risks, because if you get a flat tire, right, or if you get stopped out, right, I can change the flat tire. I can get stopped out. I'm not out of the game. But if you're risking a lot, on each trade, you're placing a lot on that one trade, and we know all those trades are random. The probabilities come into play over time, but individually, every trade's a 50-50. As much as you can cite whatever statistics you want over time, that's great. There is an edge, but each trade is 50-50. You know, so again, deploy your capital, judiciously. Stay in the game. Small wins. Somebody told me that a long, long time ago. Small wins add up. Thanks, Danny. And so what you want to do is to one of the ways to combat, that fear we've been talking about, is to have very little on the line on each trade. So much so that it's negligible. It's so negligible that you don't even think about it. All right, I lost $100. I lost $150. Big effing deal, right? No, I got $500 on the line this time, or I got $700 on this trade, right? That's going to obviously be much more impactful. Okay, so just things to consider, you know, things to consider.